Welcome back. In the green now, it's 24,150 on the Nifty. Reliance Industries is back in the green. Bajaj Finance, it's trimming some of its cuts. ITC too is trying to get back in the green now. You also have Infosys. M&M is started inching up, and Dr. Reddy's is currently your top Nifty gainer with a not the top Nifty gainer, I'm sorry, but it's been one of the movers, 1.5% higher on Dr. Reddy's. But let's get to the big macro story. Now, the second quarter GDP number came in at 5.4%. Yes, the street was expecting muted numbers given the weakness in urban consumption, the lack of government spending, but at a 5.4% print, it was much lower than consensus expectations. Now, this makes the RBI meet on the 6th of December very interesting. Will we see a repo rate cut or a CRR cut? Latha has just concluded her Citizens Monetary Policy Committee. She comes in to weigh in on that and what it means for the banks. Latha.
Yes, that's right. At 5.4%, it's such a shocker. It's expectations are normal that the Reserve Bank has to do something. And that, its priority is inflation, keeping CPI at 4% plus or minus 2. But now growth also becomes a priority, maybe even a slightly higher priority. As it is, we know ministers like Piyush Goyal have been saying that a rate cut is called for. Now, what economists say is, how can a Reserve Bank whose mandate is 6% inflation do a rate cut when the last inflation number is 6.2? And for all you know, November also will be close to 6% CPI. It's hugely going against its own mandate. And so is there a chance that they will actually lose in liquidity? Repo rate is the price of money. Liquidity is the amount of money. So a CRR cut can increase the liquidity. Now, let me tell you what the impact on banks can be. Repo cut. If you cut the repo rate, then there can be a negative short-term impact on banks because under new rules after 2012 or thereabouts, the interest rate, lending rate is linked to an external benchmark. It's called EBLR, external benchmark lending rate. So, home loans, corporate loans are all linked to either the repo or the T-bill, one of the external benchmarks. If you cut the repo rate, then all these loans will earn the banks less. But the cost of money, which is deposits, will go down slowly. So immediately, there will actually be a negative impact on bank margins. When liquidity is tight, a repo rate also is less effective. But importantly, for the banks, it is a short-term negative. Let us look at what happens in a CRR. What is the CRR? It is that part of your deposits which you cannot lend, which you have to keep idle as cash. At the moment, for every 100 rupees, 4.5 rupees CRR of 4.5% means 4.5 rupees cannot be lent. It has to be kept idle. But that money is being raised at 8% or something as an FD or whatever by the banks, but it's not earning anything. Suppose that comes down to, say, 4.25. Then a 0.2, now what is actually being released that you can lend? 0.25% of the total deposits in the system, which is 230 lakh crore. So 0.25% of that is something like 57,500 crores or thereabouts can be lent. It was earning 0. It will now earn something like 10%, 11%, depending on what loan you're giving. That means margins for every 0.25% cut in CRR can increase by about 2-3 basis points. If it's a 0.5% cut, then it can increase by 5 or 6 basis points margins. I mean, that's just blanket. Everybody's margins improve. Now, this is the first shot. Every time you give, a deposit has a multiplier. It's called the money multiplier. For instance, we get our salary from the company. It shifts from their deposit to our deposit. An additional CRR instead of 4.5 will become 4.5, 4.25 or 4. Then I pay my child's school fees. That goes to another deposit. Again, a further 4.5 has to be kept. No, now they have to keep only 4%. So there is that is called the multiplier effect. So the ultimate impact on banks over 6 months can be more. That's the basic thing. For banks, repo is slightly negative in the near term. CRR is positive in the near term and in the medium term.
Okay, all right. Thank you so much, Latha, for joining us and explaining to us what this could mean and what could the outcome be in the RBI Policy Committee. We'll be waiting for the analysis as well. Fridays when you can tune into for all the updates. But let's move on.